Hey, welcome back. It's Jason Walter here. In today's video, I'm going to be discussing the latest news about the California housing market. Is the California housing market going down? I'm going to be sharing the latest stats with you, including an update that home prices actually decreased in July. This is thanks to a brand new report from the California Association of Realtors that was just posted today. And stick to the end of this video because I'm going to be sharing how each region in California fared because there's some pretty big differences. And before that, if you're looking to buy or sell a house from virtually anywhere in the US, then go to homeandmoney.com/Jason to get connected with a great real estate agent in your neck of the woods. And also, please consider subscribing if you haven't done so already. I post frequent housing market updates so you can make a more informed decision about whether you should buy or sell a house. Alright, with that said, let's begin today's video. The biggest news is that California home prices decreased in July, and this is after 4 straight months of home price records being broken. To give you a brief background about home prices in California, home prices decreased in January and February of this year, but in March they reached an all-time record high of $759,000. Then it jumped to a new high of $814,000 in April, $818,000 in May, and then the median sold price increased to a new record high of $819,000 in June of this year. And get this, June's all-time high of $819,000 was the 9th record broken in the last 14 months. As I mentioned in my video from about a month ago with my previous California housing market update, home price growth has slowed greatly over the past several months. In fact, the median sold price in July decreased to $811,170 for a single family home, which is a 1% drop from the previous month, but a 21.7% increase from July 2020. This marks the first decrease of home prices in California since February of 2021. Something I definitely want to mention, this is probably the biggest takeaway with today's video, is that it's entirely normal during a normal real estate market for home prices to decrease every single July. So let me explain. If I had to guess, there's going to be a lot of misinformation out there saying that the housing crash has started because home prices decreased in July. The fact remains that during a normal housing market, home prices tend to decrease in the summer months. And for those of you who follow the channel, you know that I support my claims with data, so here you go. I'm going to share with you an Excel download that I pulled from the California Association of Realtors website, and it shows the median sold price each month over the past several years. And I'll leave a link in the description below so you can check that out. Except for 2020, which was a completely abnormal real estate market, home prices went down every single year in July since 2015 and more or less continued that downward trend through the winter months each and every year. In July 2015, the median sold price decreased $2,000 to $490,780. In July 2016, it decreased about $7,000 from the previous month. And this dip of home prices in July happened again in 2017, 2018, and 2019. So it appears that we are experiencing a more normal housing market as we are seeing a slight dip of home prices in July of this year. And this is exactly what I expect the National Association of Realtors to report next week when they publish July stats for the nation. However, if this trend continues of home prices decreasing into early 2022, this could be more of the beginning of a long-term trend and not a temporary or seasonal downturn. Of course, time will tell, and I'll be sure to keep you posted. So part of the reason why home prices decreased in July in California was due to a dip of home sales in the luxury market. So let me explain. So for example, when there's a high amount of luxury home sales, that pushes up the median sold price in the state. So homes that sold in the range of $1 million to $1.99 million increased by 32% from a year ago in California. And homes that sold above $2 million surged by 50% on a year-over-year basis. These gains are impressive, but not as impressive as the triple-digit gains that we had from earlier this year. So for example, for sales over $2 million in this state, this spring reached sales gains of around 300%. But ever since June of this year, that figure has dropped big time, including homes that sold in the range of $1 million to $1.99 million. And this is one of the main reasons why the median sold price in California has been decelerating and recently decreased. Another reason for this could be due to the fact that housing affordability is getting worse and worse as home prices reach near record highs and home buyers give up. So for example, the California Association of Realtors reported that the average mortgage payment skyrocketed 19.6% from 1 year ago. And here's another graphic that I found to be very interesting. The dotted red line is the beginning of the COVID pandemic. At that time, the percentage of homes that sold for $499,000 or less was around 45%. But the share of homes that sold for $1 million or more was only less than 20%. Fast forward to April through July 2021, and there have been more homes in California that sold for over $1 million than houses that sold for less than $500,000. It goes to show how we had a K-shaped recovery. It's not just home prices that decrease in July though, because home sales also decrease in July as well. In California, home sales decreased by 1.6% from June to July of this year, and sales also fell by 2% from 1 year ago. This was the first year-over-year decrease in home sales in the last 12 months. In looking ahead in the next 1 to 2 months, pending home sales have decreased by double digits for 2 consecutive months in California. In July, pending home sales decreased by 15.9%, and that could translate to a dip of home sales for August into September. In addition, pending home sales dipped by the largest amount in the luxury market. So if I had to guess, this will cause home sold prices to decrease further in the next 1 to 2 months. Meanwhile, the California real estate market still remains very competitive. So the average sale to list price ratio is just below an all-time record high. In July, homes sold for 3.8% over the seller's asking price on average. In addition, 7 out of 10 homes sold in July sold for over the seller's asking price. Okay, let's change gears slightly and talk about housing inventory, because we obviously need more houses listed for sale in order to have a more balanced real estate market. Inventory has been increasing very slightly recently, but the month supply of inventory stands at 1.9 months. We need approximately 4 to 6 months to have a balanced real estate market. And the last time we had that was around 2011. And the last time buyers in California had an advantage over sellers was way back in 2007 to 2009. In addition, here's the number of active listings by month. So the light green bars represent the number of houses for sale in 2021. So as you can see, inventory has been increasing in January to July of this year, which is a good sign for home buyers. However, we only have about half as many houses for sale this July compared to July 2018 and July of 2019. On top of this, home sales, which represent the green bars there, continue to outpace the number of new listings in blue. This demonstrates the imbalance between demand and supply in our California housing market. During a more normal housing market like 2018 and 2019, it was more common to have more active listings than home sales. On top of this, houses are still selling very, very quickly. So the average days on the market was only 8 days in July, which means on average, a home seller accepts an offer from a home buyer in only 8 days, which is a near all-time record low. Compared to July of 2020, it took 17 days. Mortgage interest rates were also very low in July of this year. So the average 30-year fixed rate mortgage hovered just below 3%, which is very close to record low levels of 2.65% that was set in January of this year, according to Freddie Mac. Okay, changing gears slightly, let me discuss briefly how each region fared in California, because there's some pretty big differences here. The California Association of Realtors, or CAR, breaks down the state in 7 major regions. So 4 out of 7 regions experience a decrease in home sold prices on a month-to-month basis, with the San Francisco Bay Area dropping by the most. In stark contrast, the far north surged well ahead with a 5.3% increase in home prices from June to July of this year. In addition, all 7 regions had a dip in home sales from June to July, with the LA metro area and the far north decreasing by double digits. And by the way, if you want to know how each county fared in California, then I'm not going to be going over that in today's video. Otherwise, this video would be 20 minutes long. So instead, I'll leave a link in the description below. So check out the link below if you want a great real estate agent referral from virtually anywhere in the US. Also, if you got any value out of this video whatsoever, then please hit the like button. I greatly appreciate that. Also, please consider subscribing if you haven't done so already. And also follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day and I look forward to seeing you on the next video.